Nike set to report their earnings on Tuesday after the bell. Now, only two Dow stocks have done worse this year, Boeing and Intel. But will news of a new CEO and hopes of a China recovery turn things around? Brian Nagel thinks so. He's with Oppenheimer. He's got a buy rating on the stock. Brian, good to chat with you again. Is this going to be now like a kitchen sink type period for Nike? And what that means is you got a new CEO coming in, just flush all the bad news out at once or not?
Well, good afternoon, Brian. Look, I think that will be the case. I mean, what's interesting here, if you go back, this is what we're talking about is the fiscal Q1 report. Okay, so it's the period ended August. If you go back to Nike's fiscal Q4 report, so that was for the period ended May, that was a kitchen sink. So this may be kitchen sink take two. But I think, as we look towards this report next Tuesday evening, obviously the numbers will be important, but I think what's going to be much more important is kind of the sentiment from Nike, the commentary from Nike, particularly with the company's new CEO set to join here in basically just a few weeks.
How about the core business of Nike? I know we're talking about China stimulus. Listen, I don't know if China lowering rates to help the real estate sector is going to push people to go buy shoes. Maybe it will, maybe it won't. How is their core business doing? Because when I go with me or for my son or whatever, and I'm looking for shoes, there's a lot of new competition out there. There's OC on cloud, right? There is Hoka. There's others. And I just wonder, is this a Nike issue or just competition's gotten better?
Well, look, I think it's a bit of both. I think the struggles at Nike have definitely opened an opportunity for some of these smaller brands to take market share. So we're definitely seeing that. I mean, my thought on this is as Nike strengthens, which I expected re-strengthens as I expected to over the next several quarters, I very much expect some of these smaller competitors to start to struggle as they're starting to compete with a much more, much stronger, better positioned Nike. But to answer your question, I think it's really a combination of both. I think you've had Nike weakening because of internal shortcomings. That's opened an opportunity for some of these smaller players to get much stronger.
I know the market cheered when it was announced that the current CEO, John Donahue, is going to be leaving, and you got the new CEO coming in. The stock soared. It was on this show. They were talking about it all day long. Is that going to matter? I mean, is the CEO going to matter that much in the near term? Or is this like a super tanker where it turns slowly?
It's going to take some time. I mean, if nothing else, we've got to keep in context. Nike is now a $50 billion company. So just given its sheer size, it's going to take some time to basically turn this company around. But again, I think for the stock, to the extent this management team talks about some of their early wins, new products, in geographies, I think that will be a positive. But to answer your question, it's going to take some time, to turn a company of this size around. We start seeing much better results, more results that are more indicative of what Nike can produce.
What's the biggest, if you were sitting there with the new incoming CEO, and he says, Brian, what should be my biggest change on day one? What would it be?
Product innovation. Nike's got to get back on its product innovation game. I think that has really lulled here. Nike's just not putting out the product that's driving its core consumers to spend like they have historically. So we need to get product innovation back to what it had been. That's really key. Support that with marketing. But I think the real key here is product innovation.
Like it. Brian Nagel on Nike. Brian, we appreciate it. Have a good weekend. Thank you.